like any good banker, I left and took a long vacation in Hawaii with my wife. My wife is here, by the way. And I just kind of decompressed. I was doing the 120-hour work weeks, and so I got back from this really relaxing vacation and started putting together a business plan. And so I did an investment banker's version of a business plan. It was like 100 pages, charts and graphs, and it was a work of art. And I started sharing it with people that I knew, people that I trusted. And the business plan essentially contemplated us raising $2 million. We were going to go build like this awesome eBay platform and then take over the world. And so I remember distinctly, one person came back to me and said, okay, this idea for a business, it's a good idea, but screw technology. You don't need technology for this business. So why don't you just get going? Don't go try to raise a bunch of money. Don't go try to build a whiz bang platform. Just open your doors, start a business. So that's what I did. So in the middle part of 2004, I put $50,000 in the bank, opened up a bank account, and started working on the next version of the real business plan. Eventually, was able to secure some angel funding. We raised about $350,000 from a bunch of angels that you've never ever heard of, because I didn't know anything about raising money from angels. So looking back, I guess the $1.7 million valuation, I probably sold too much of the company, but it got us started. But what was really, really interesting was when we opened up our doors in called the early part of 2005, it was 5 of us, 5 telephones, and an Excel spreadsheet. That was it. That was our marketplace. And the funniest part is the New York Times picked up our launch as a story and left out the fact that it was just a bunch of us in a room making phone calls all day long. But because we launched that way, because we just went at it, we were profitable on essentially the first day. Because we had not built a bunch of infrastructure, we hadn't wasted a bunch of time trying to build a whiz-bang platform. So in our first year in 2005, we did about $1 million in revenue. 2006, we did about $2.5 million in revenue. Now at the time, we had only focused on just one illiquid asset class, and that was restricted stock in public companies. And we certainly knew that eventually we were going to get involved in other asset classes, but for us, that was enough of a business. So along comes 2007, and we're on like a $5 million run rate, very, very profitable. And we get a phone call. I wasn't getting venture phone calls often, but I did get a phone call from SecondMarket Capital, a venture fund in New York, saying, okay, we like what you guys are doing. We see that, at this point, we had built the first version of a platform. And they said, we like what you're doing. We think there's an opportunity to create a more scalable business, help you get involved in other asset classes. We want to invest. And at the time, I was thinking, okay, I'm a first-time entrepreneur. I never wanted to look back and say, if we had only raised that money from this venture capital firm, we'd be still around today. So we ended up raising $3.8 million from SecondMarket at about a $16 million valuation. And so with that money, we started aggressively hiring, started building technology, our next version of our platform. And in 2008, the wheels really fell off the economy. And we were incredibly well positioned to expand our marketplace, expand our platform beyond just this one asset class. We got involved in auction rate securities. We got involved in bankruptcy claims. We got involved in the really toxic stuff, the toxic CDOs and mortgage backs. We got involved in private company stock, which I'll come back to. And then we got involved in whole loans and things like that. So business is taking off, doing really, really well. But a year ago, we then got a phone call from folks with Li Ka-shing and Temasek saying, okay, we love this business you're doing. We love the private company market. We want to get involved and help you take this business to Asia. So we raised $15 million from Li Ka-shing and Temasek about a year ago at a $135 million valuation. And that money was used for scaling and for expansion into Asia. So today, we are, I think, arguably the largest marketplace for buying and selling alternative investments. We have about 140 employees. So we're based in New York. We have an office in San Francisco, office in Hong Kong, and an office in, soon to have an office in Israel. And I'm going to attack a popular misconception, We are, in fact, regulated. We're very regulated. We're regulated by the SEC. We're regulated by FINRA. We're licensed in all 50 states. We got an enormous legal and compliance team. And as you can see from this chart, the business has really taken off over the past year or two. So there's a number of participants. If you understand the power of the network effects, that's what we're starting to see now in our business.